Good morning, everyone, and welcome. This is the morning market review. It's Monday, the 11th of September. My name is Russell Shaw. I'm a senior market specialist at FXCM. I'd like to just draw your attention to my email address. If you'd like to correspond, please send emails to rshaw@fxcm.com. And I'm just going to bring up our disclaimers. We'll start off with the high risk investment warning. I'll keep this on screen for a few moments. Good morning, Kim. Good morning, Katie. Good morning, James. Thank you very much for signing in this morning. Much appreciated. Amy, good morning to you. All right, let's just bring up our market commentaries disclaimer. All right, and here is our references, market scope and trading view. I just want to start off with a pair. We don't look at all that often, but we'll probably start looking at it more frequently going forward. This is the US dollar Japanese yen. It's fallen from zone 1 into zone 2, so US dollar is weakening relative to the Japanese yen. The Japanese yen is strengthening, and I think it's quite important the reason why the Japanese yen is strengthening. There were comments over the weekend by the Bank of Japan governor, Ueda, and Mr. Ueda told the Yomiuri newspaper that the Bank of Japan could have enough data by the end of the year to determine whether it is going to add negative interest rates. And what's effectively been happening here, let's just go through to market scope, in trading view. I do want to come back to this chart. This is the real rate. We've been looking at, and I think that we carry on looking at it. Using it as the first sort of point of examination. But let's change it up. Instead of looking at the 10-year, let's take a look. Instead of taking a look at the real interest rates, let's just look at US 10-year minus Japanese 10-year. Okay, just bear with me, I'm bringing that up. And you can see that the spread here perhaps starting to curl down. It hasn't quite curled down yet, but it's looking to curl down. Now, I think let's take the RSI out. If we take a look at this on a weekly basis, and we put in the US dollar Japanese yen underneath that, we get quite an interesting correlation here. US dollar Japanese yen. I'll just put that in underneath. And you can see the correlation here is really strong. There's a movement up there, and there's a movement up here. Okay, there's a movement down here, and then of course there's a movement down here, and then you can see when the 10-year starts moving up, so does the US dollar Japanese yen. So the correlation between the 10-year spread is robust. And what we can do is just take a look at the the Japanese 10-year. And let me just get that in correctly. Okay, so what's been happening is that the Japanese authorities have been embarking on what's called yield curve control. So for a long time, they kept their Japanese 10-year at 25 basis points. This fluctuated to about 50 basis points. And now with Mr. Ueda's comments, we've gone up to 70 basis points. In other words, the Japanese yield is starting to get higher. As the yield gets higher, it becomes more attractive to hold Japanese debt instruments. And of course, that filters through to the currency. So that's kind of the big news that happened over the weekend, and it's affected the US dollar. If we go through back to market scope, whilst you can see the US dollar Japanese yen has reacted, so did the US dollar. So if we go back to bring the US dollar up. Hey Howard, morning to you. You can see that the US dollar. So now we're looking at the US dollar index. It's moved down quite forcefully. It's moved down quite forcefully. And the catalyst for this movement is the comments from the Bank of Japan governor. But I think it's potentially setting up a sort of buy the dip type of situation. So let's go back to TradingView, and we go back to the real rate. So the way that we do that is just go US 10-year and just minus inflation. So minus, we call it, it's called break even inside TradingView. Okay, so here's the real rate, and real rate is carrying on sort of to the upside. We are looking at it on a longer term weekly basis. Let's put in the US dollar underneath that. So if the comments by the Bank of Japan governor are pulling a dollar down, but the real rate is still looking quite lucrative, well, I think that's something that's worth taking note of, right? This is the US dollar underneath, and you can see we're getting it. Here's that red. It's a potential dip, and it's really sort of from this, say from about here especially, that the dollar is being pulled up by the real rate, because it's above zero. It's theoretically it's contractionary supportive of US dollar. All right, so let's just go back to US dollar and do the top-down analysis. Let's just understand what we've spoken about so far. There has been some news out of Japan that's got the US dollar pulling back somewhat, but the real rate for the US dollar still looks very interesting. It still looks very lucrative, right, for fixed income investors. So if that's the case, then any dips in the US dollar may be something worth taking note of. And if you can see that we've got a uptrend here in the US dollar, we've got the higher trough followed by the higher peak. We've got the RSI above 50. We go down to the daily chart. We can see there's the pullback. It's quite a severe pullback. We're still in zone 1, right? And you can see that the momentum is above 50. Let's go down to the hourly chart here, and let's see if there is support levels here. Okay, so the S2 level is the level that's in play at the moment. There is an overlap. In other words, there has been a previous support. We'll just put that in. Okay, support there. The idea is, will there be support here? We don't want to predict. Okay, that's important. If there is a dip in the uptrend here, it needs to prove itself to us. In order for it to prove itself to us, there has to be a positive crossover of the exponential moving averages. I'm using a 5 and a 10 hour here, and I would need to see the stochastic cross up and move out of the 20 minus areas. So if we have that happening, a positive crossover of the EMAs and a positive crossover of the stochastic, then we can set up take notice because it's potentially a dip in the uptrend. What are the arguments against that? Well, at the moment, we don't have those crossovers. In fact, what we do have is a strong downwards momentum. We're trying to assess if that downwards momentum has hit its end, right? If it's hit the low. So that's why we need to see the stochastic crossover and start moving back up. If it hangs out in the lower quintile, then the pressure on the dollar will stay. So we just want to keep an eye on that. What's interesting, if you take a look at the candlestick from about an hour ago, it is a positive candlestick. So there is some support that looks to be creeping in over here as well. You can see it's a hammer. We call that a hammer. So we want to just see what happens. We've got another 5 minutes to the cash open, and the German cash open. We'll see if it brings in some sort of trade on the currency side that supports US dollar to the upside. Let's take a look and see what's happening on Euro US dollar. Just want to see if there's any comments coming in at the moment. Can we start shorting the US dollar Japanese yen? So again, I can only talk about myself. So I don't touch US dollar Japanese yen. Just as a matter of fact, because there is Japanese authority interference. If you short US dollar Japanese yen and they happen to interfere, well, then you're going to get a tailwind taking it down. Just be very careful with regards to what UADA said. They're gathering data. Hopefully they'll have data by the end of the year that will provide some sort of incentive to end negative rates. But what happens if the data doesn't lead them to end negative rates? Then it moves against you if you start shorting it. You can start looking at the US dollar Japanese yen, I would agree with, but if you're going to start trading it, just be very, very careful, and your stop losses must be in place, and your risk management must be in place. I hope that answers the question. It's also difficult for me to say yay or nay and give a sort of a clear-cut, outright answer, just because I don't have that. I don't have the authority to do that. So, Kim, just let me know if that answers your question. Okay. I would suggest that if there is a buy the dip opportunity in the US dollar, that will reflect in US dollar Japanese yen as well. If you short, it could bite you. So just be careful there. All right. Let's take a look at Euro US dollar. All right. So we're still looking for more price points here to get some sort of sense of trend. All I have is a reference peak and a reference trough. We do have price below the 30-week moving average, and we do have the RSI below 50. If you take a look at the euro on the daily, we are still in zone 3, and we're getting some blue there, right? So effectively, this might be the rally in the downtrend. That's exactly what we look for, rallies in the downtrend. So if that's the case, go through to the hourly chart, and let's just clean this up slightly. And what we could do here is we could just move this resistance point. Yeah, so we're at the R1 resistance. So I think the R1 level is a potential key level that we can keep an eye on. We don't want to predict, we want to just see if we get a bearish crossover of the EMAs, and we want to see if we get a bearish crossover of the stochastic. And if we get a bearish crossover of the stochastic, okay, then we need to see the stochastic also coming down to the 20 minus areas. That potentially is the rally in the downtrend. Okay, so I think there are setups that are forming here. Again, I want to just reiterate, don't predict, okay? Don't predict. We can't predict. This could run all the way to R2, okay? We want to see the reactions of the indicators to help us with our timing. We're quite close to price action. Excuse me. Excuse me. We're quite close to the tick here. It's an hourly chart. So even if we don't get at the exact high, we're getting pretty close to the high. Just watch the signals. Let's take a look at cable. Okay, just up. Let me just see if there's any other comments. All right. Here we've got price action below the 30-week. We've got the RSI below 50. In terms of the zones, we are in zone 3. We have got that blue in zone 3. Again, the potential rally in the downtrend. So let's go down to the hourly chart. And here, all right, it is we're not flush on R1, we're not flush on R2. If the R1 level is the key level, there is an overlap here. Again, it could be R2. So I guess we look between R1 and R2. Do we get the cross down of the exponential moving averages? Well, if we get the cross down in the exponential moving averages, we want to get the cross down in the stochastic as well. If we get a cross down in the stochastic, then we want to see the momentum move to the downside. Well, look at just one more chart, and that would be the DAX. It's just gone cash open on DAX side. Let's see what's happening there. All right. There does look to be some sort of movement in the DAX. Let's just clean this up. It's moving into the R1 resistance area. Let's do a top-down analysis. Let's go to the weekly chart. All right, so the momentum is holding, I beg your pardon, the support is holding, momentum's flat, but at least it's above the 30-week moving average. We can see that the momentum is flat. The RSI is basically on 50. So the flat momentum there might, might be something just to keep. We want to trade higher momentum type of instruments. The low momentum, yeah, something to keep an eye on. Nevertheless, let's go to the daily. Okay, so we're in zone 2 here. We're in no man's land. So I think for the DAX, it's a matter of being patient. We don't quite have it in zone 1. We don't quite have it in zone 3 at the moment. So we'll just have to be a little bit more patient with the DAX. Can we look at NASDAQ and oil if time permits? Yeah, Katie just asking for. All right, let's just bring up NASDAQ. I quite like the NASDAQ chart, but I'm a bit worried about NASDAQ because of the high real rate. The high real rate is going to act on NASDAQ. Technically, it does look as if we've got this higher trough in. I want to see if we're going to get the higher peak. Here's the reference candle, KD. So I've drawn in the ellipse, and then of course here is the condition 2 and 3. So I like the fact that we've got the higher trough. I think perhaps just like the DAX is in zone 2, perhaps we want to wait for the NASDAQ also to move out of its zone 2 into zone 1. So I would suggest, just because of the higher interest rates here, that we just be very careful with NASDAQ. It can get hit by higher interest rates, and the real interest rates are quite high at the moment. So be careful there. And if I just bring up UK oil as a proxy for oil, all right, so I think oil is having a terrific run. You can see we've got the higher trough followed by the higher peak. UK oil is above the 30-week moving average, and you can see that its RSI is above 50. So it's looking as if there is an uptrend there. You go down to the daily chart, it's in zone 1. Okay, just be careful, perhaps tending towards an overbought condition. We're not quite there yet, but just something to keep in mind. And if we go down to the hourlies, what you're looking for here is for the central pivot to hold. So we would want angle in separation, okay, in the EMAs. We would want a positive cross in the stochastic. If we get that, then it's the lower time frames syncing up with the daily or the weekly. Does that help, KD? So we don't quite have the crosses yet, but it's just something that might happen considering that we're at the central pivot. All right. Any other questions? Any other questions? I think what we'll do then is conclude at this point. I want to wish everyone a good day, a good evening ahead, and we shall chat tomorrow morning. Thanks, guys. Have a terrific day ahead.